Okay, so this video is only for the people who want to become millionaires or crorepati's in the next 10 years and not when they're 70 years old in a rocking chair with arthritis in both their knees. So only watch this video till the very end if you're as aggressive as I am and you're willing to do anything and everything in your capacity to make this work. We'll talk about how to increase your income, what are the different kind of investment options out there, how much of your portfolio to allocate to these different kind of options, so on and so forth. So let's first talk about a very common rule of investing. Okay, so a very popular rule of investing is called the 50-30-20 rule, which is also talked about by people like Anku Wariku in his videos, where 50% of all your income should actually go towards your needs, such as your rents, your EMIs, your bills, so on and so forth. 30% of that income should actually go towards your wants, such as eating out, drinking alcohol, spending on your girlfriend, and all that useless garbage. And 20%, only a mere 20% of all that income should actually go towards your investing. And I say to that, bullshit. See, your 20s and early 30s is the only time where you can be very aggressive with investing and multiplying your money. Because once you get into your 40s, 50s, you have more responsibilities. Also, with as your age increases, your testosterone decreases and you become less ballsy in general. But having said that, it is just very stupid to try and invest or build businesses in those age brackets. So for a moment, I want you to forget about everything Ankur Wariku, Ishan Sharma, Pranjal Kamra, CA Rachna, all of these guys have said, and I want you to listen to me. You need to spend 80% of all your income into investing. I repeat, you need to spend 80% of all your income into investing. People like Iman Gadzi, Grant Cardone, Alex Ramosi, Adani's, Ambani's, all of these people have actually been practicing this for a very long time. For that matter, Grant Cardone has actually turned $3,000 of his savings, $4.6 billion of net worth. He actually even tweeted about this very recently. So now you might ask me ki bhai, what are you saying? Mere to kharche khatam hi nahi hote. How do you expect me to spend 80% of all my income into investing? But don't worry, I'm going to give you the exact roadmap of how you could do this. Okay, so there are some basic rules in this whole thing. Okay, so rule number 1, go and live with your parents or go live in a PG or a hostel. Most companies allow a work from home, and even if they don't, I want you to negotiate and actually go ahead and do this. I know for a fact if you go and live with your parents, your living cost or that need cost, which we talked about in the 50-30-20 rule, will effectively go to zero. Or if you go ahead and live in a hostel or a PG, again, that whole thing comes down by 1/5 instead of paying the rent. Now you might say that, this will not work for me, this is impractical. But remember what I said in the beginning, you are willing to do anything it takes to become financially free in the next 10 years. So rule number 2, stop wasting money on wants completely. Stop flexing that iPhone which you bought from your mom's savings. You don't need that MacBook if you're not using it for your business or some creative purposes, and you definitely don't need those shoes. Also, stop eating outside. I mean, you don't need to go outside every single day. You don't need to drink that alcohol, and very importantly, break up with your girlfriend. Don't lie, you know that she's wasting your money and you get nothing in return. So the only focus you need to have in the next 5 to 10 years is how to increase your cash flow and how to invest more money to actually build up a great portfolio. So let's talk numbers. We are going to talk about how to make 5 crores in the next 10 years with a 20% ROI. I will tell you how much money it will take to actually get to that. Okay, by doing some quick math on how to hit 5 crores in 10 years, at a 20% ROI, the number comes out to be 1.3 lakhs per month. I know it might sound like a lot, but let's get into how you will actually do it. So strategy number 1. This is how I personally have converted 15,000 into more than 40 to 50 lakhs in revenue just in the past 2 years. And it is something which is called high ROI skills. Going back to how you could invest 80% of all your income. So now you have started living with your parents, you have stopped going out to eat, and you have broken up with your girlfriend. But you still might not be earning enough. So the average college student who passes out or a fresher typically earns between 30 to 75,000 per month. And 80% of that income is nowhere near to make you a millionaire in your 30s. So technically, even if you save 100% of all your income, even food, it'll still take you 55 years to make that 5 crores. So assuming that you make 50,000 per month, you will actually need to triple your income and earn at least 1.5 lakhs to make this happen. And for that, you will need to invest in these skills. So according to Alex Ramosi, whose companies do more than $200 million in revenue every single year, or more than 1,500 crores in revenue every single year, actually says that it takes only 20 hours to learn any skills. So effectively, by spending 2 days by going through a course, you can actually start executing on these skills. So the top 3 skills which give you the highest return very quickly, and these are something which anybody, like if you're going to a job, if you're not going to a job, if you're a college student, anybody can do, are number 3, marketing and advertising, more specifically Facebook ads and Google ads. Number 2, website development. Again, here you don't need to know any hard coding skills. You can just learn platforms like Shopify, Squarespace, WordPress, which are drag and drop. And number 1, tuition classes or classes like guitar classes or any other skill which you know. So now easily, with all these skills, and if you have started with these businesses, in the next 2 to 3 months, you can start making an additional 50,000 to 1 lakh every single month. So a typical marketing advertising person can earn up to 25 to 30,000 per project per month. So if you take in 2 to 3 clients, you can easily make up to 50 to 75,000 per month. And I say this from experience because this is what I've been doing for the past 2 years. Talking about a website developer, a new website developer typically charges anywhere between 50 to 75,000 to develop a website. The best thing is you can actually combine both of these services, which is the marketing service and the website development service, and cumulatively you can make a lot of money. Talking about the tuition classes or those guitar classes, you can typically charge 3,000 to 5,000 based on what you're teaching them. I would recommend that don't take in students who are actually expecting, or they're in a stage of their life where they're expecting very high returns on the kind of time investment they're doing with you, such as people who are preparing for JW or whatever. I would rather recommend go ahead and teach younger children or college students. Again, by this strategy, you can easily make anywhere between 50,000 to 1 lakh, depending on how you go about it. You'll need to be really smart. But yeah, from here on out, let's call that 1.3 lakhs as your principal amount. And now let's talk about the proper investment strategies. So at number 1, we have mutual funds. So this is where we'll be investing 50% of our whole portfolio. So the best way to start investing in these mutual funds is actually via platforms like Grow or Small Case. The best thing is that you can use these websites to actually even vet which mutual fund you want to go ahead with. Here, since we have a long-term perspective, we only need to see the last 3 to 5 year return rate. Since we want to be aggressive, we want to look for mutual funds which typically invest in small caps or mid caps. The reason being that there's a very high possibility that these stocks end up becoming large cap stocks in the future. Another great thing about mutual funds is that these are handled by industry experts and fund managers who vet these stocks based on some very important metrics. Because at the end of the day, everybody wants to make big money. Some great mutual funds in which even I personally invest in are number 1, Quant Small Cap Fund, number 2, Canara Robeco Small Cap Fund, and number 3, the Parag Parik Flexi Cap Fund. The best thing with this is that it invests in other various companies like Google and Microsoft as well. For example, let's check if we invested 1.3 lakhs 3 years ago in this mutual fund, what would be its value today? This is freaking crazy, isn't it? Okay, so let's now talk about strategy number 2. This is where another 10% of your principal amount will go towards. So these are the PPFs, ELSS, and other applications like the 12% club. The best thing about these are that these are very safe because these are backed by the government, and they also give a great return on investment on an annual basis. Okay, so PPF is a public provident fund. This is backed by the government of India. It typically has a lock-in period of 15 years, but you can withdraw before that as well. And they give a great return of 7 to 8% annually. ELSS, on the other hand, is equity links savings scheme. This is also backed by the government and functions more like a mutual fund. They have some great ROIs, and obviously there are tax benefits to them as well. So some of the top PPF and ELSS funds in India right now are: for the PPFs, we have the SBI PPF account, we have the ICICI Bank PPF, the HDFC Bank PPF, and India Post PPF. The top ELSS funds in India are Axis Long Term Equity Fund, Mirae Asset Tax Saver Fund, Aditya Birla Sun Life Fund, and the Canara Robeco Equity Tax Saver Fund. Okay, so let's now talk about strategy number 3. This is where it gets really interesting, and this is also one of my personal favorites to actually invest in. With the right strategy and the right psychology, you can make some fantastic gains in a very short amount of time. So this is the equity and crypto market. Out of the 40% left of our pie, we want to invest almost 30% in the stocks and 10% in cryptos. And if you're not comfortable with cryptos, you can completely get into stocks. Okay, so remember, we are investing and not day trading. Don't waste your time and go onto YouTube and be enticed by all these profits these guys are showing. Your time is much better spent learning those high ROI skills and actually getting a steady cash flow from them. So let's first talk about the crypto market. The crypto market saw a huge decline last year, but now things are looking much better. As you can see from the charts, Bitcoin, after bottoming, has now slowly started its climb upwards. Now, obviously, nothing is set in stone, but from a technical perspective, and since we have a 10-year perspective in mind, the crypto is slowly starting to see a rise again. Again, crypto is super risky and only dabble in it if you have a little bit of idea in investing. And also one thing to note is only go for Bitcoin or Ethereum to invest in. Let's pause for a second and talk about what makes an investment profitable. In simple terms, it is buying something for a value which is lesser than its true or potential value. For example, let's talk about Adani. After the Hindenburg report, Adani stocks have plummeted. So the crucial thing to understand is that companies like Adani and Ambani's, they have built up companies which are doing real work, like in the mining sector, in the real estate sector, in the ports, so on and so forth. They aren't internet scams like FTX, which was only a 13-member team. So these companies which have employed more than thousands of people, they're here to last, and these are the ones who will actually build the future of India. One more important thing to note is that the growth of a nation, the GDP of a nation, is strongly linked to the stock market. So just don't go by what is coming into the news or what you hear online. It is the macros which matter even more than the technical and the fundamental analysis. So I would recommend try and invest in the Nifty 50 stocks, which are the top 50 stocks in India. And it makes logical sense, right? Since these are the top 50 companies, they're bound to grow over the next 10-year period. It is just important to know that getting in at the right time, at the right place is very important. And it is only then will you make some high returns. The best way to invest is actually first building a stock list in the companies you want to invest in, such as tech companies or construction companies, whatever you want to invest in, whatever you understand the best, tracking those exact same stocks on a daily basis, on a weekly basis, and on a monthly basis, and investing once you see that it has come down or the stock is down for whatever reason. Again, don't forget, for an SIP or a PPF ELSS, your money will get cut automatically. But for investing in stocks, into crypto, you will need to be disciplined enough to actually track the stocks which you're looking at and look for opportunities in the market to get in the right time. But as I said, the most important skill which has gotten me to where I am was actually upskilling myself and starting my own business. So you can check out this video here on how you can become a millionaire with these seemingly conventional businesses. And don't forget to hit the subscribe button to not miss out on any information like this in the future.